Ladies and gentlemen, good day and welcome to the Indigo Paints Q2 FY23 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manoj Menon from ICICI Securities. Thank you, and over to you, sir.
Hi, everyone. It's a wonderful good morning, good afternoon, good evening, depending on the part of the world you're joining this call from. Representing ICICI Securities, also I have my colleague Aniruddha Joshi is also there with me. It's our absolute pleasure to host the 2Q FY23 results conference call of Indigo Paints. The management of the company is present with us. Over to Srihari from Indigo for the further proceeding.
Thanks, Manoj. Good evening, everyone. Thanks for joining the earnings call of Indigo Paints for the quarter ended September 2022. As usual, today on our call, we have our Managing Director, Mr. Hemant Jalan, our Chief Operating Officer, Mr. Suresh Babu, and our CFO, Mr. Chetan Humane. We'll start the proceedings with a quick brief overview of the performance of the company by Mr. Jalan, followed by the Q&A. Over to Mr. Jalan.
Thank you all for joining in on our earnings call of Indigo Paints for...
This is the operator. Can you help me with the full name and company, please? Hello. Can you help me with your full name and company, please? If there's no response, you'll be joined back to the call.
Now this year, this was further accentuated by excessive rains in many parts of India and extended monsoons across the country, which have adversely impacted the sales of products, especially for exterior applications. Despite these headwinds, Indigo Paints has clocked a higher top-line growth compared to the rest of the industry with fast-moving profitability metrics. Now, our financials for Q2 FY23 have been uploaded on the stock exchange portals along with our analyst presentation, and I'm sure you've had a chance to go through them. Now, I'll just briefly summarize our financials, give a very brief note on future strategy and guidance, and then open it up for Q&A. Now, compared to Q2 of last year, our sales in Q2 of this year have registered a top-line growth of 23.71%. The gross margin this year for this Q2 has been flat compared to Q2 of last year, almost identical at 41.72%. Compared to Q1, the preceding quarter of this year, the gross margins have slightly declined from 45.2 to 41.7. Now this is typical and usually happens during Q2 for most paint companies because of the inferior product mix which pervades in Q2. However, you will note that our gross margin percentage continues to remain ahead of the rest of the paint industry by a significant margin. We have also, like the rest of the industry, undertaken minor price increases on some select products during the quarter, and now raw material prices have stabilized and some of them are showing signs of declining. For Q2 this year, compared to Q2 of last year, our total EBITDA has increased by 44.5%, and the EBITDA margin has risen from 11.92%, which is what it was a year ago, to 13.92% for Q2 of this year. Profit after tax has increased by a whopping 174%, and PAT margins have increased from 6.8% in this quarter last year to 15.1% in the Q2 of this year. Now, you will note from the presentation that part of this huge increase in PAT is attributable to a one-time reversal of some excess tax provisions of 16.3 crores which pertain to earlier years for which the assessments got completed during this quarter and therefore this reversal is happening. Despite this reversal, even if you take away the effect of the 16.33 crores of contribution to the PAT, despite that, our PAT on an absolute amount has expanded by 53.2% compared to the same quarter last year, and our PAT margin has gone up from 6.8% to 8.45% during this quarter. Similarly, if we look at the full 6-month performance of this year, the top line sales have risen by 32.5% compared to the corresponding 6 months of the last fiscal. Gross margins have been virtually flat at 43.4%, almost the same thing as the first half of last year. EBITDA in this half has grown by 58.7% compared to the EBITDA of first half of last year, and the EBITDA margin has expanded from 12.36% last year to 14.8% in the full 6 months of this year. PAT, again, for the full 6 months has increased by 127%, and PAT margin has gone up from 7% to 12.1%. Once again, if you adjust for the reversal of the excess tax provision, even then the PAT has expanded by almost 62%, and PAT margins have gone up from 7% to 8.65% during the full 6 months. Now, in line with our brand building strategy, we continue to spend aggressively on advertising and promotion. You will note that the A&P expense for the quarter was down marginally by 7% compared to Q2 of last year. However, in Q1 of this year, we had a significant increase in the A&P spend compared to Q1 of last year, and this entire phenomena is attributable to the last year's split of IPL, which got split between April and September, and therefore there was a comparatively lower outlay in the first quarter and a higher outlay in the second quarter. So perhaps more meaningful to look at the A&P spends for the full 6 months, which have been 13.56% higher than the corresponding 6 months of last year. Now, you should note that on a half-yearly basis, despite the fact that we had flat gross margin and slightly higher A&P spends, the EBITDA margin has expanded significantly for the 6 months from 12.36% to 14.8%, reflecting the benefits kicking in from our economies of scale. We have also furnished the volume and value sales growth figures for each of the 4 major categories of decorative paints, consistent with our past pattern of transparent disclosures. As has happened in the last few quarters, the value growth is always higher than the volume growth as a consequence of the price increase of almost 20%, which was undertaken during the last 12 months. During the quarter, you will note that the company has witnessed a small dip in our volumes for emulsion category, -4%. However, keep in mind, please, that the emulsion value growth in the preceding quarter was 34.4%, and in the yet preceding quarter, that is Q4 of FY22, was also a 43% volume growth. So because of some trade schemes which closed out in June, maybe a small amount of the emulsion sales got shifted to the preceding quarter, which is why you see a marginal dip in the volume growth figures for emulsion. But what is heartening to note is that in the enamel space, where the company has traditionally been somewhat weak, we have had almost a 29% volume growth, and we are now gradually getting our rightful share of the pie as far as enamels is concerned, which is a fairly large segment in the decorative paint industry. We continue to focus on our network expansion, and as of 30th September, our active dealer count stands in excess of 16,750, and our tinting machine population stands in excess of 7,700. Now, in the earlier calls, we have mentioned regarding our pivot to focus on 750 larger towns of India, which are the Tier 1, Tier 2 towns. And we have been executing that during the last 6 months, and I'm happy to report that we are witnessing very good results from that, and we expect further boost in sales from these towns in the upcoming quarters. It is the early results that we have derived from this initiative, which is mainly responsible in our exhibiting a slightly higher top-line growth compared to the rest of the industry, and we expect this to accelerate further in the coming quarters. To undertake the influencer outreach program in these 750 towns, we have doubled the resources in terms of manpower on the ground to make this more effective, and we continue to increase our manpower base, efforts, energy, and spends in penetrating these larger cities. Looking in the future, with industry-leading gross margins and the softening of raw material prices which we are witnessing, we will continue our thrust to achieve higher growth through higher promotional activities and recalibrating the channel incentives. In terms of promotion, during the last quarter, the company launched a massive ad campaign in Kerala, a new ad to relaunch a very top-end emulsion of ours, starring our new brand ambassador, Mr. Mohanlal, the celluloid superstar of Kerala, backed with significant channel incentives. We have had an early Diwali this year, and monsoons which continued almost till 3 or 4 days before Diwali. With all that behind us, we are hopeful that the upcoming months will drive the sales further, and that we at Indigo Paints will continue to positively surprise you on both top line and bottom line growth. That's all I have to say in terms of opening remarks. Look forward to receiving your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Abneesh Roy from Nuvama Institutional Equities. Please go ahead.
Yeah, thanks. My first question is on the demand side in Q3. Some of the other players have been saying that this time the gap between the rainfalls ending and the festival season, this time it was quite short. Normally in the previous years, the customer behavior is that you would like to have at least a 2 to 3 weeks kind of a gap wherein the painting can be fully done, painting selection and all that. This time that was not possible in most regions because of the very short gap. And secondly, sir, last year, if you remember, the sharp price hikes by most of the players happened in Q3, and that led to preponement of the demand pipeline filling, etc. In that context, do you see for yourself also Q3 demand being a bit challenging? You are more positive. That's why I'm asking this question. Q3 demand, is it looking a bit challenging at this juncture?
So, Avnish, you're right, and to some extent that whenever we have an early Diwali, see by now I think if I look at what has happened in the last 15 years, I think we have all gotten used to monsoon now continuing in India till at least 15th October. It is called a late monsoon withdrawal, but if it happens 15 years in a row, I think that has become the normal monsoon pattern now. Gone are the days when the monsoon would withdraw by 1st September, which used to be the official monsoon withdrawal date. It is now a good 45 days after that. Now, Diwali date shifts from year to year. Last year we had a more normal Diwali time. I remember it was 4th, 5th of November or something around that time. So, if monsoon finishes by 15th October, you're right, you get a good 20 days between the end of the monsoon and Diwali, and you have bumper pre-Diwali sales. However, whenever you have Diwali coming in November, although you always get a great pre-Diwali paint sale season, it is usually followed by a lull in the next 2-3 months. The rest of November and December and January gets kind of muted, at least as far as northern India is concerned. My own experience is that whenever we have an early Diwali, as we had this year, when Diwali was, I think, 24th of October, and the gap between the end of the monsoon and Diwali was hardly 4 or 5 days. Now, people are not going to start painting their house 2 days before Diwali. So, at that time, the pre-Diwali sale suffers. However, once Diwali is over, this loss in sale that you experience, pre-Diwali, tends to get made up during the next 2 to 3 months. So a lot of this, it is true, October, I'm sure, has been a bad selling month for all the companies in the paint industry. I'm sure it will get made up for, if not completely by December, definitely by January, because there is a latent demand that always overhangs and it gets made up. Now, what you're saying is right, that last year there were huge price hikes that were undertaken. A major one that happened in early November, and another fairly significant price increase that happened in mid-December. So because of that, there was some preponement of the sales, but that preponement did not happen as, getting shifted to Q2. Basically, last year, some of the November demand, especially for the larger players, because whenever there is a big price increase, the channel tends to first put its hands on the requirement that they have for the larger players, which are more liquid stocks. So they would have, I expect, had a huge hike in their demand in October and then again in November, and probably a very, very dull December. But overall, if you look at the quarter, I don't know whether it impacted it all that much. For us, of course, we would have got some benefit in that little preponement from November to October. The magnitude would have been smaller. So what is going to be the result as far as the entire Q3 is concerned? Well, the jury is still out, because we have just finished the worst month of the quarter, which is October, which was heavy rainfall. Also remember, it is not just rainfall. You lose a lot of days during the month to holidays. You first have Dussehra, which means a 3-4 day holiday in most parts of North India. Then you have Diwali, when there is 3-4 days of holiday. And in at least 2 states of India in the north, Bihar, Jharkhand, and parts of eastern UP, you have their most major festival called Chhath, which falls on the 5th and the 6th day after Diwali. So all the 3 festivals fell in the month of October. So the number of working days in northern India were, of course, severely impacted. However, Kerala did extremely well for us in the month of October. And, we expect a more normal pattern emerging from Q3 onwards, because the benefits of value price increase would be present in a very small respect as far as Q3 is concerned. So the overall top line growth numbers of the industry, which in the last few quarters have been, 20%, at times even 40% when you had some pre-COVID, impact in the preceding year, etc. I think all that is going to moderate and come down to more normal levels where you don't have that pricing tailwind behind you for most of the quarter. So let's see, I'm quite hopeful that November and December we'll see a huge upsurge in sale to make up for the slightly weak October which the industry has experienced. So let's see what the future unfolds. Very difficult to put a number guidance on that.
Sure, sir. Thanks. One follow-up on the demand side. You mentioned October month has been good for Kerala. So is it because of the focused marketing campaign with the brand ambassador? And in Q2 also, was Kerala growth better than the overall 23% growth? Given Kerala last 2 years, in terms of base quarter, there has been one challenge or the other because of the COVID or because of the high rainfalls, etc. So in Q2, how was the Kerala growth?
Kerala growth was extremely good. It was, fairly good, in fact, more than the rest of the country per se. Part of it can be attributed to this new campaign that we have launched, although that campaign was launched only from 15 September, so it would have had a marginal effect as far as the entire quarter is concerned. The other thing you have to note is that, Diwali is not really a festival that is celebrated in Kerala. And rainfall activities in Kerala during the months of September were not anything unusual, whereas you must have read in the newspapers in just the neighboring states like Karnataka, it has been just deluged with rains all through September and in fact all through October. And the similar has been the story in most states in northern India. So fortunately for us, Kerala was a little more normal kind of a monsoon pattern, nothing very excessive, no flooding or waterlogging or anything like that, coupled with, of course, a new campaign and good execution. I mean, Kerala for us has been doing very well in the last 3-4 quarters successively. So after COVID-2 was over in May of last year, I think from July onwards of 2021, Kerala has done extremely well for us.
Sure, sir. Last question is on the industry leader coming out with backward integration plans of VAE, VAM and white cement. Their claim is this will help them in terms of unique product and reduce import dependency. Now, first time a paint company in India is doing this kind of a thing. So wanted to understand, does this put the smaller paint companies in some kind of a disadvantage from a longer term perspective?
No, I don't think it does. I think there is abundant supply of all kinds of emulsions, including VAE emulsions in India. We have not been using that very much in the last few years. We have used that in the past. At the moment, we don't use VAE emulsions because we don't find them very cost effective, but they're abundantly available. And the same goes as far as white cement is concerned. So what the industry leader has to do, they are in a different scale of operation and compared to us, so they can probably answer better as to what advantages they will get. But you ask me as to whether we feel we will be at any disadvantage, the answer is no. Today we don't make any of our emulsions in-house, and not just the market leader, but many of the larger players choose to make most of their emulsions in-house. And you still note that our gross margin is much, much higher than any of those companies. So I don't think that we suffer from any cost disadvantage by not making those products in-house. It's a different philosophy and it's a different scale of operations. So what is good for them is not necessarily good for us and vice versa.
Sure, sir. That's all from my side. Thanks so much.
Thank you. Anyone who wishes to ask a question at this time, they may please press star and 1. Our next question is from the line of Jay Kumar Doshi from Kotak. Please go ahead.
Hi, thanks for the opportunity. What should we expect in terms of gross margin recovery in the third quarter and fourth quarter based on raw material prices at current levels and rupee depreciation?
Can you use the handset, please?
Hi.
I can hear you, Jay. You were asking about gross margin recovery in Q3 and Q4.
And EBITDA margin as well, yes.
And EBITDA margin. Normally for us, both in terms of top line sales and in terms of bottom line, historically, Q1 has been the weakest quarter. Q2 is a little better overall in top line, although EBITDA margins and gross margins are under some stress in Q2 because of the deteriorating product mix during the monsoons. Both these numbers are much better in Q3 and the highest in Q4. So that has something to do with the product mix. This time we have two tailwinds supporting us. One is the product mix which changes in Q3. More exterior painting starts. Many of our specialty products, especially our differentiated products, their sales mainly happens in Q3 and Q4, and they tend to push up both the gross margins and the EBITDA margins. Even in terms of, top line, the total sales are normally much higher in Q3 compared to Q2, and Q4 sales for us are the highest. So the EBITDA margins are also always much, much higher in Q3 and Q4 because, the same standard expenses, the overhead, the advertising, and all the other expense get amortized on a much, much larger top line. So I think you should see a good recovery in both the gross margin and the EBITDA margins in Q3, and you will see a further improvement in Q4, mainly because of top line growth and improving product mix. I won't give a specific number guidance as to by how much you expect it to increase, but I think there will be a very noticeable increase in both the parameters that you asked about.
But reasonable to assume that given seasonality, sequential increase in gross margin for Indigo Paints should be better than rest of the industry?
Now, whether it will be better than the rest of the industry or not, I really am not privy to them, but I'm looking at our own gross margins. I mean, if you look at it last year, Q2 was gross margin in Q2 was 41.3, and
for Q3 it was 42.89.
Yeah, it went up by about 1.5 to 2 percentage points. It went up further in Q4. So, yeah, roughly in the range of 1.5 to 2% increase in gross margin sequentially into Q3 and further into Q4. This year, there are some, at the moment at least, softening raw material prices, which should help it a little further. And the same thing goes for EBITDA margins. EBITDA margins last year also rose very sharply from Q2 to Q3 by more than 2.5 percentage points, and a further increase of 4 percentage points in Q4. So something along those lines ought to happen. I can't give you very precise number predictions as to how it will happen, but that is the normal pattern that we experience every year between Q1, Q2, Q3, and Q4.
Understood. This is helpful. And do you expect further price increases by the industry, or do you think that pricing is more or less stabilized at these?
I would be somewhat surprised if the industry leaders went for a further price increase. I really don't see the need for it. Especially because some of the raw material prices have started softening. So I don't expect either a price increase or a price decrease at this point in time. I think that prices should be pretty much stable till the end of the year as far as our selling prices are concerned. Depending on the amount by which raw material prices soften, I expect to see an increased aggressiveness on the part of everyone in terms of trade discounts, and that is normally what happens when raw materials soften within a limited range, and that is already evident in the last 1 or 2 months on the ground, and we are also following suit, and I think we'll be able to match the firepower of others in terms of being aggressive in trade discounts. But I don't expect any price increase in any significant manner over the next 4 or 5 months.
Was there an element of higher trade discount in September quarter, or that is something that you expect in December quarter?
No, I think that price discounts will be aggressive in the December quarter also, because everyone would have a little more margin to play around with. And, the earlier tailwinds of the price increase that drove your top line growth up much faster, those are not going to be very much in the play. And the fact that people would have had a relatively poor October month I would expect trade discounts to be a little more aggressive in November and December.
Understood. Final bookkeeping.
That's normally what happens, so it's okay. It affects everyone in the same way.
Understood. Final quick bookkeeping. Dealer and tinting machine additions, decelerated a little bit in 2Q versus 1Q, while you were, focusing more on the larger towns. So, is this just a quarterly sort of anomaly, or is there something?
I didn't understand your question. Can you repeat that, Jay? Your voice is a little unclear. What are you asking about tinting machine accounting?
Tinting machine and dealer addition in 2Q, number dropped versus 1Q.
Oh, always it is a little difficult to do that in Q2 because of monsoons. See, when we are listing not our total dealers, we are always listing active dealers. So during monsoon time, many dealers are not purchasing on a regular basis. So even though you add dealers, there are some dealers who have not done much purchasing in the months of July, August, September, etc. And therefore they drop out from the count of active dealers. So you add some and you lose some in the active count. So this is merely a count of our active dealers. It is by no stretch of imagination a count of our total dealer population, which would probably be in excess of 25,000. But there is a certain way in which we quantify as to the regularity of purchase and determine whether somebody has been an active dealer or not. And tinting machine, yes, there is usually, but even in Q1, we added about 300 tinting machines. We have added more or less the same, maybe 281 machines in Q2. So give or take, we are averaging something like 100 tinting machines a month. So about 300 per quarter. In some quarters we are lucky, it adds a little faster. In some quarters it's marginally slower. Normally monsoon time, when sentiment amongst the dealer counters is generally at its lowest ebb, it's normally the worst time to try and push them to add a tinting machine. They get a little more gung-ho when Q3 and Q4 comes, when their sales at the counters are much better and they are in a better frame of mind to accept a tinting machine. So that's pretty normal, but I don't think there has been any significant drop seasonally in terms of dealer addition or tinting machine addition. Those are pretty much going on at the right pace. Of course, we'd like it to happen at a faster pace, but that's always true.
Understood. Thank you so much. That's it from my side.
Thank you.
Thank you. The next question is from the line of Manoj Menon from ICICI Securities. Please go ahead.
Sir, I got a couple of questions. One, before the questions, actually, good performance, by your company in the context of the demand which you otherwise see. So the question is, anything on the general demand trends which you're observing, particularly in the larger markets which you have. The reason I'm asking this because the last 12-24 months, we have clearly seen a significant divergence between discretionary and the non-discretionary part of it, whereas the discretionary urban top-end part of it has largely performed very well. And even the discretionary within staples actually have somewhat performed well, etc. Now, off late, we kind of started hearing from, let's say, a restaurant company or a footwear company, etc., that there is some softness which they are actually finding. Just wanted your perspectives on your top-down comments on demand conditions based on anything which you're observing.
So we don't notice anything significant changing in the demand conditions. And it's very difficult to extrapolate from what you hear about restaurants or other consumer products to paints. Many of the other sectors witnessed a huge demand slowdown during COVID and immediately after COVID, whereas the paint sector, if you recall, remained fairly resilient all through the last 2 years of the COVID pandemic. Of course, there were lockdown months when everything was shut down and you couldn't do anything about it, but it used to bounce back very fast when the lockdowns were lifted, which is why the paint industry has done fairly well during the pandemic. And we don't notice anything adverse happening on a broader spectrum. Month to month, weather patterns affect us much more than any other industry, especially rainfall. because obviously you don't start painting a house when it is raining cats and dogs outside. So monsoon patterns, some changes in festivity, some shifting of certain festivals from one month to the other month may make some difference when you are comparing a Y-on-Y monthly sale. But overall, I don't find anything very different either on the positive or the negative side. I think it's pretty much demand as usual. I was hearing the commentary of some of the larger players whose results have come out, and they said that in the last quarter, maybe the smaller towns have done slightly better than the larger towns. The commentary was quite the opposite in the previous quarter, when larger cities apparently performed much better than smaller towns. We, of course, are not, our presence in the larger towns, as you are aware, has been slightly weak compared to the others, and that is something that we are trying to correct. But during the quarter went by, we didn't find anything unusual about the larger cities or the smaller towns as far as demand is concerned.
Understood, sir. And one question on the putty business. Now, given that you are the only paint company, at least till now, who actually owns the asset, so just trying to understand, what are the typical economic value add or ROCs on a steady state basis, for a product like this, which actually generates?
On putty?
Yes.
See, the reason we have decided to make putty ourselves and have always made all our putty ourselves is because of the location of our plant. We have a large manufacturing location at Jodhpur. Now, that is the prime place as far as manufacture of putty is concerned. Two basic raw materials are required for putty in large quantities. One is white cement. Now, the only two manufacturers of white cement are both located within a 50-60 kilometer of Jodhpur. That is both Birla White and JK White. The other raw material is dolomite. Now, the best quality dolomite in the country and at a cheap price comes from Rajasthan. You have some other deposits in the Katni, Satna area of Madhya Pradesh, but the quality or the whiteness of that deposit is not as good as what you will find in Rajasthan. Now, when we are ideally located in terms of manufacturing, with all the best raw materials coming from less than 100-kilometer radius, it didn't make any sense to outsource that manufacturing to somebody else. Other people, other paint players don't have any manufacturing facility in Rajasthan. So when they are located somewhere else, they may find it more cost-effective to outsource it to someone else. And some of them outsource not just putty, they outsource a whole lot of other decorative paints to job workers. We have chosen not to do that. Our cost structures at our manufacturing locations are fairly lean and thin, and I think we are able to manufacture it as effectively as any job worker would, or perhaps more effectively than them. We'd have a much better control on quality. And any job worker is obviously going to take some profit margin for whatever he's doing. So having all those advantages, I would presume, and I don't have access to internal numbers of other paint companies, I would assume that the gross margin contribution that we get from putty is perhaps or should be better than what other paint companies realize by outsourcing it. And margins in any case for putty are very low. But to measure ROC separately for different product lines is a little difficult, and that's not the way in which we look at it. I mean, if you look at it very objectively, with the very low margin that putty gives, theoretically it may make sense not for any paint manufacturer to ever offer any putty in the market. But that's not how you can play the game. You cannot pick and choose and say that I will not manufacture this product because it gives a low return, and I will only manufacture products that give a high gross margin. I mean, you either go all in or don't go in at all. So, there are various products, for example, take enamels. Now, enamels is usually sold by all companies in 30, 40 shades. They usually sold at the same price for all the shades or marginally different price. But if you go on a shade-wise analysis, there are some shades which give almost a zero margin and some shades that give a much higher margin. Now you can't pick and choose and say, I will not sell these shades and I will sell that shades. And the same applies to putty, that it's an integral part of decorative paints. It's the first item that gets used in a house, and therefore for a strategic purpose, it is important to offer putty. And even though its margin contribution may be lower, I think all paint companies choose to engage in that products. And for us, we are a little more comfortable than others, perhaps, as I said, with a caveat that I don't know their internal figures. But because we manufacture it in-house and we are manufacturing it at the best possible logistical location, we ought to be a little more comfortable than others as far as that is concerned.
So very
These
fair
are
point.
some of the reasons why you see our overall gross margin much higher than the rest of the industry. This may be one of the small contributing factors towards that.
Yeah. Thanks, sir, for the exhaustive response and fair points. And just one update. I don't know if I missed that in your commentary earlier. An update on the Pudukkottai expansion.
Yeah. So the Pudukkottai expansion is now in its very, very final stages. The erection of the machinery have also all been practically done. Now we are at the last stage of doing the interconnecting pipelines and the electrical cabling and the instrumentation cabling. We were hopeful earlier that we will start our production sometime in December, although we still press our people on the ground to do that, and I hope they are not listening in on the call, but deep down in my heart, I know that will probably not happen and it will spill over to January. But we are trying to maintain the pressure to commission the plant or at least start some trial production in December, although between you and me, I think it's more likely in January. It's a large plant, a very automated plant. It will take some time to stabilize, so it's not that we'll press the button on one day in January and the full production will roll out. But at the same time, it is something that is not at all a concern because we have adequate capacity to meet the demand for the next 8-9 months. So even if the plant commissioning or the stabilization of the plant once we commission it, goes by a few weeks here and there, we are really not dependent on that capacity to meet the demand in the forthcoming quarters at all.
Sir, one follow-up here. At the full capacity utilization, Pudukkottai phase 1, which you're having now, would expand your like-for-like capacity by what percentage from today?
Oh, that's very difficult to answer because, capacity in the paint industry is a very nebulous term. It depends upon your product mix. The same equipment can be used to manufacture a variety of different paint products, and depending upon what product mix you choose, the effective capacity changes. So that's a fairly difficult question to answer, but in terms of water-based paints per se, and that is what the new plant is coming for, it will, the existing water-based plants that we have both at Jodhpur and Cochin, the combined existing capacity that we have is about the capacity that we are adding at Pudukkottai. So in terms of water-based paints, I think it will double our existing capacity, and it should take us very comfortably for the next couple of years.
Very clear. Sir, one clarification. Some of your colleagues are very much there in the call.
Yeah, I hope people at Pudukkottai are not on the call because we are exerting pressure on them to start by 15th December.
Sure. Thank you, sir. Aman, you can take the questions in the queue, please.
Sure, thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead.
Hi, sir. Am I audible?
Yes, you are. Please go ahead.
Yeah. So my question is on your expansion strategy. All this while we have expanded by going into tier 3, tier 4 towns. Our logic at that time was that it's very difficult for a small player to really expand into the larger towns, and therefore we are expanding via the small town route. Now you're saying that you want to shift focus a little bit and expand even in the tier 1, tier 2 cities. So what gives us the confidence that basically we will be able to do that now? Because still, as a percentage of the decorative industry, our market share is still maybe around 2%, so fairly small market share. I understand in states like Kerala it would be higher, but then in some of the states it would be even lower than 2%. So just wanted some thoughts on this as to your pivot in strategy and what you think makes it possible.
So the difficulty in cracking big cities has got less to do with your size or market share. It has more to do with your brand equity. So the reason that we have always given why we initially focused on going to the smaller towns is that when we were a small company, we could not afford advertising in those days. For the first 12, 13 years of our existence, we have not spent anything on advertising because it was not possible. We didn't come from a pedigreed background where we had a huge amount of money in our pockets to burn in advertising. And therefore, we had no other options at that stage. For the last 10 years, we have invested very heavily into advertising. And you're aware of the fact that our A&P spends are almost 3 times what the industry average is in terms of percentage of top line. Even in absolute amounts, the amount that we spend in the last 3-4 years has been much, much higher than a few of the larger players who are much larger than us in size. And we have been blessed to have a great brand ambassador in Mr. MS Dhoni, who's been with us for now, 4.5 years. So with that amount of ad spending that we have consistently done over the last 10 years, the last 4-5 years being with the help of Mr. Dhoni and his image, I think that the brand equity that we have built across the country is very strong. Now, when you build a brand and invest in advertising, that advertising is seen by people not just in small towns, they are seen as much by people in big cities. And along with television advertising, we have also been investing a lot in online mediums. So today, the brand equity and the awareness of the brand is very, very strong in all genre of cities in India. And therefore, we felt that it was the right time to now attack the larger cities. And as we go into those cities, there is no problem about brand awareness. Everyone is well aware of the brand, and some dealers even ask, where were you in the last 4 or 5 years? Why didn't you come earlier? So now it is just a question of building the network there, engaging with the influencer community in these bigger cities, which is marginally different from the way in which you engage with influencers in the smaller towns. And that is why we have put a lot of feet on the ground to do that. And we are beginning to see the results. And the effect of that result, in no small measure, is the cause for the slightly higher top-line growth that you see in this quarter. And we have been saying for the last 2 quarters that, magic will not happen in 3 months. It will happen gradually over a slightly longer period of time. And hopefully this breaking out of the pack in terms of top-line growth percentage will only accelerate in the coming quarters. That's what we hope for, and that's what we strive for.
Right, sir. One observation is that while you've sort of said that, okay, I have started with small towns, now I am also focusing on large towns, the large players are doing the opposite. I mean, they were more stronger in the large towns, but in the last 2-3 years and even going ahead, I think the larger players are focusing more on the small towns in order to get growth. Do you think that's some kind of risk or threat to your existing sort of core strength?
I think it is a misnomer that the larger players are only now looking at the smaller towns. I think they have been represented in the smaller towns very well for the last 50 years. If you talk of the existing 4 large players in the industry, who were the so-called organized sector before we came in, they have all been around for more than 75 years in the country, some for 100 years. So don't please think that there is any corner of India that was ignored by them. The tier 3 and tier 4 towns, to the best of my knowledge, also accounts for almost 50% of their sales in terms of value or something close to it. So I don't think that any of the larger players have ignored or neglected the smaller towns in the past. If they have some vacant gaps here and there that they try to fill up, well, that's an ongoing process that will continue for the next 100 years for all companies that are there in the space. So I don't think that there is any increased aggression or any lack of penetration of the smaller towns by any of those players. They have been present everywhere, and they have been present as much in the larger cities. For us, the ratio has been different. A much smaller portion of our sale came from the larger cities because we had chosen to remain away from it by choice earlier months, and now we are focusing there, and we hope that in a year or two our proportion of sales coming from the larger cities versus the small towns will become the same as any other paint company, large or small, in India.
Understood, sir. And finally, if you can give some idea on what is the difference in margins or economics of the large towns and why they are, I mean, if at all, they are more attractive than small towns for any paint player.
No, I don't think that there is any difference in margin or spends or expenditures or discounts or anything like that. And I sincerely doubt whether the larger towns are more attractive or less attractive than the smaller towns for any player. I think everyone has to have the equal focus in both, because both contribute almost the same to your overall sales value. Today, when we focus on the larger cities, by no stretch of imagination do we start ignoring the small towns, because that is the bulk of the sale that we do. It's just that you have to penetrate the larger cities in a slightly different manner. The difference that comes is the nature of the influencer. In a smaller town, the influencer is an individual painter. In the larger cities, the influencer is usually a painting contractor who has 20-30 painters employed under him. And therefore, the manner in which you have to reach out, or the category of people that you have to reach out to, who influence the choice of brand, is slightly different in a big city versus a small town. That's all that there is.
Sure, understood, sir. That's all from me. Thanks and all the best.
Thanks.
Thank you. The next question is from the line of Prashant Koti from Sundaram Mutual Fund. Please go ahead.
Sorry, there was some disturbance in the line. Who is the questioner, please?
Prashant Koti from Sundaram Mutual Fund.
Sundaram Mutual Fund. Okay, thanks.
Thank you for the opportunity, sir. So firstly, just a data point. I do not know if you just highlighted that or not. What is the share of differentiated products as of now that we're having, or have you stopped sharing the data?
No. We share that at the end of every year. Please go back to our commentary 2 quarters ago when the year ended. I think it was almost 30%. It was 29.6% at the end of FY22. The reason we don't share that on a quarter-by-quarter basis is that these products by themselves have a pronounced seasonality, and therefore these numbers will go up and down in quarter-by-quarter depending upon which products we are talking about. And therefore, at the end of every year, we share that, and we have shared the numbers of what these percentages were at the end of each fiscal for the last 4 or 5 years.
Sure.
So you will notice that they have generally risen by 0.5 to 1 percentage point on here, and I promise you we will share this number when this financial year is over.
Absolutely, sure. Thank you, sir. Just the first question is more so on the dealer numbers. So we are obviously seeing that number increasing by about 15 to 20% for the last couple of years now. If like you said that you're probably wanting to venture into the tier 1 markets, let's say more penetrated markets. So going forward, should one assume that the revenue per dealer or the throughput per dealer, would that be a bigger variant to look at, or should the number still be considered to be a bigger number going forward as well? So
you're very perceptive, and that is going to be the right way to look at it as we enter the larger cities, because in the larger cities, the potential of a dealer is usually 2 to 3 times the potential of a dealer in a smaller town. And therefore, if you add 1 dealer in a tier 3, tier 4 town versus adding 1 dealer in a tier 1, tier 2 town, on average, you can expect a much, much higher, almost 3 times the throughput per dealer in a large city versus a small town. And therefore, as we add more and more dealers in the larger cities, and as more and more tinting machines get populated in these larger cities, then the throughput per dealer would jump up very fast.
So safe to assume that you'll have to look at more at a revenue per dealer number to be growing year on forward, rather than the actual dealer numbers increasing.
As an internal metrics, we look at both. You have to look at both. And ultimately what you look at is none of this. You look at the overall top line and the overall bottom line. All of these are determinants to that. And that is the ultimate objective, to get higher top line growth and higher bottom line growth. Number of dealers is one measure. Number of tinting machine is one measure. Throughput per dealer is one measure. Throughput per tinting machine is another measure. And there are many other metrics that we internally monitor, which are all determinants to the final goal.
Understood. So just another question is with regard to the fact that you're again entering into larger towns, and one is that product array completely done to probably be present as far as the larger towns are concerned, or probably they accepted, the dealers over here accepting Indigo as a brand in the larger towns? And a follow-up to that is that would it also entail a higher incentive structure to those dealers because we are entering, or we feel that now we are a well-known brand and you would not have to have a very differentiated incentive structure as compared to tier 2, tier 3 markets?
I don't think the incentive structure is any different from a small town or a large city. So we have not faced any disparity as far as that is concerned. Okay. In terms of acceptance, if you go to any new geography, like for example, there were some states that we have entered fairly recently. Take Himachal Pradesh. We have kind of established a depot there just about 7-8 months ago. Now we are not been marketing there. Now there, whether you go to a small town or you go to a large city, everyone has heard of the brand, but you still have to overcome that initial inertia of a dealer getting familiar with you, starting limited business with you, and then slowly developing confidence in your service, in your accounting practices, in your product quality, and then gradually ramping it up. We entered Jammu and Kashmir 1.5 years ago. We faced the same problem there. 6-7 months ago, we have set up a separate depot in Delhi. Now, Delhi is completely a very, very large city. It's the metro. So you go through the same process. So the process is the same, whether you enter a new small town or whether you enter a large city. There will be nothing will happen overnight. You will have to talk to the dealers. Dealers are obviously dealing in some other product because you were not present. They will start buying some of your products and gradually scale it up. And that is agnostic of the size of the city. But I don't think the incentive structure changes at all from a large town to a small town.
Understood. And one last question, sir, if I may. We typically always share that Kerala has been a very strong market for us and has been growing very well for us. And we are penetrating into the next largest cities as well. Any data in terms of how the next 7 cities or maybe the next 8-10 towns are there would actually be helpful if you can help us on that.
Towns or states? Kerala
towns,
is a
states, So like I said, any the next 10 states or the next 5 states, any such number would be helpful.
I mean, none of them are close in terms of the contribution of Kerala, but we have a fairly large presence in UP, in Bengal, in Assam, in Bihar, Jharkhand, Chhattisgarh, growing fast in places like Andhra, MP, Gujarat is doing well. So there are a whole lot of states, very difficult to predict. I mean, they're all around the same level of sales. So you might say there are about 7, 8, 10 states that compete for the number 2 slot, and they're all doing well. Which one will break out faster than the others to start giving a disproportionate share of our revenue is something that I can't predict. But they're all doing well.
Sure. Thank you very much, sir, and all the very best to you.
Thanks.
Thank you. The question is from the line of Hardik Doshi from White Whale PMS. Please go ahead.
Yeah, thank you for taking my question. So you mentioned that firstly, it's good to see you growing faster than, let's say, the industry leader and also the overall industry after several quarters.
I'm sorry. Can you speak a little louder? I'm not able to follow your question.
Can you hear me now?
Yes.
Yeah.
Okay. So I wanted to just ask in terms of, you finally are growing faster than the industry leader after several quarters, and you said that it is because of the focus on the increasing presence in the tier 1 and tier 2 cities. Can you break up what percentage of your revenues is from tier 1, tier 2 cities this quarter versus last quarter and the same quarter last year?
I have that numbers, but I'm not sure if I want to disclose that publicly at this open forum. But all I can say is that the growth percentage that we experiencing in the bigger cities is much higher than the growth percentage in the smaller towns. But I'm afraid it will be a little difficult for me to share the granular numbers with you.
Okay. Yeah, I mean, I appreciate you do disclose a lot more than most of the competitors, but
I can't disclose everything, I'm sure.
No, I understand that, but since this is a key focus area for the company, it would be good for us to kind of at least see how you're getting the traction out here. So maybe if you can consider that. Just secondly, I wanted to ask, so now, I mean, can you maybe elaborate a bit more in terms of this tier 1, tier 2 cities, right? I mean, I understand what you replied to one of the participants, basically saying that the brand name was already there, and it was just about focusing on the influencers. Any metrics you can share in terms of dealers that you were reaching out to or influencers? What are the campaigns? I mean, just some more color to help us understand how much of acceleration we can expect going forward, and what will be the drivers, some KPIs around it.
As we have mentioned, see, what happens is that the influencer in a small town is an individual painter usually. So all along our paint cans had a token for the painter in terms of financial gratification. And it is nothing unusual that we do. All paint companies do the same thing. Along with that, you conduct regular painter meetings where you call a group of painters loosely associated with a paint counter, and you do some demonstration and comparison of your paint versus a competitor's paint, usually by means of a blind test, so that they get convinced about the superiority of your quality. So these are two things that we have been doing religiously for the last 20 years in the smaller towns with the individual painters. Now, when you start doing the same work in a bigger city, there the influencer, as I said, is a painting contractor who employs 20-30 painters. Now, the painter token that is there in the can is pocketed by those employees, the junior painters. You need a separate incentivization program for the contractor. So from April this year, we started putting a separate token as a financial incentive for the contractor. Again, nothing unusual. It is what other companies have been doing. We had not been doing that till March of 2022. And we've created an online app by which both the painters and the contractors can scan their respective tokens and redeem those tokens for cash or whatever they want. So all that has been operational. Now, when you go to a big city, it is not simply having a meeting with the contractors to convince them on the quality, which used to be sufficient with the painters in smaller towns. Here, even after you have demonstrated your quality by means of a blind test comparison with some competitor, even if the contractor is convinced, people in big cities, the ultimate house owner, is usually a little more brand sensitive than a consumer in a small town. And therefore, the contractor needs your help in going and visiting the project site, doing some sampling and convincing the house owner about switching over from some preconceived brand that he had in mind to Indigo paints. So there is a lot more on-ground activity that you have to engage in these bigger cities to crack a site. And for that, you need a separate team of people who will not only conduct these meetings with the contractors, but they have the time and the energy to visit the project sites that the contractor takes them to, do some sampling on the sites, talk to the homeowner, and help the contractor convert that site from some other brand to Indigo. So that is the difference in color about the activity that you have to do. Now, A prerequisite to all of this is already a good brand equity. If you don't have that brand equity established and you're trying to visit a homeowner's site and convince him of a brand that he has never heard of, then the likelihood of conversion is exceedingly low. And that is what is different from a small town versus a big city. In big cities, people are a little more brand conscious, and therefore having a good brand equity which has been built over a long period of time becomes of paramount importance to break into these cities. The dealer is not the main influencer. So therefore, you have to work on different parameters in a bigger city if you want to make a success of it. And it is that activity that we have been indulging in very aggressively for the last 6-7 months, and continue to expand the scope of this in the coming months. And that is what gives us the confidence that we will reach the rightful share that we want in terms of market share in the larger cities as what we have in the smaller towns.
Thank you. We'll take the next question as the last question from the line of Patanjali Srinivasan from Mirabilis Investment Trust. Please go ahead.
Sir, I just noticed that I think sometime in April we told that we'll focus more on tier 2 cities. So we've added about 700 tinting machines in the last 6 months. So could you see roughly if around 2/3 or more of the machines we've added is more in the tier 2 and tier 1 cities?
Pardon, what was the question?
So we have added around 700 tinting machines in the last 6 months in our distribution chain. So I just want to know if more than 2/3 of it is being added in tier 1 and tier 2.
I don't have that exact figure available with me. Maybe if you reach out to our people in the next few days, I'll have to ferret out that information and give it. But I doubt if that number would be as high as 2/3. But previously, the number of tinting machines that we had in the tier 1, tier 2 cities were very, very low. And we are seeing a very significant uptick in that. So therefore, the number of tinting machines being installed now, a much higher percentage than earlier, is going into the tier 1, tier 2 towns. That is correct. But I doubt if 2/3 of them would be the tier 1, tier 2 towns. But I don't have the exact number in front of me right now to be able to accurately answer that question.
Okay, sir. Sir, and institutional business, have we been able to get anything like off late? What is the environment like in that?
No, we are not. We do not pursue institutional sales as a matter of choice. That is, we do not sell directly to builders or the government or any large institution like that. If there are inquiries from any institution, it is always routed through one of our significant dealers in that place, and we have chosen to stay away from institutional business as of now.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to the management for the closing comments. Thank you, and over to you.
Well, thank you all for a very engaging session that we have had. I hope I've been able to answer most of the questions that you've had. We're glad to see that in the last few quarters, when we were almost in the same bandwidth of growth in top line compared to the rest of the industry, we seem to be breaking out. And the bottom line growth is what gives us more cause for cheer, that the bottom line growth is significantly more, maybe by a factor of 2 in terms of percentage terms from the rest of the industry. I sincerely hope that we will be able to not only sustain this pattern, but also accelerate upon it, and look forward to interacting with you again at the end of next quarter. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of ICICI Securities, that concludes today's call. Thank you all for joining us, and you may now disconnect your lines. Thank you.